Ooh, doggy. Dalton. Dalton's in the house. Hold on a second there, Dalton. Come on. There we go. And there we go. And there we go. Dalton's in the house. Leo, Devin, good evening, good evening, good evening. Slow roast Dunic. Slow roasted eunuch. Okay. Alfredo Maria. Maria. Okay. Bruno, what's happening? Whitlock, Cool Beans, all showing up in the house, just getting ready to get started. Just me again. Cool Beans. Jesse, what's happening? Hombre, Hambone, what's happening? Lindarella, good evening, good evening. Kathleen, how are you doing? Michael Sinclair, what's happening, Doc? Jersey's in the house. Okay, Adrian, Secretariat 19, how you doing? Snowy, what's happening? What's happening? Wisdom, what's happening? Micah, was that Milkus? Milkus, that's an interesting name. Axion, Cool Beans. Tony, what's happening? All right, so let's get ready to roll. I got to check something for a second, really quick. What is the date? The date, it is 13, 12, 11, 11. Holy cow, it is officially the 11th week of the year. 11th week of the year. Here it is. All right, so that being said, buy and hold stocks. What's happening? Good evening, good evening. Okay, James Branchu, what's happening? Okay, let's get ready to start. Let's get ready to roll. Oh, look at this. Buy and hold wants to take a look at C and then Altria. Hold on. C and then Altria. Okay, we'll take a look at those. Okay, not a problem. Macy's. Jersey wants to take a look at Macy's. All right, we'll take a look at Macy's. All right, that being said, good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks. Take you along for the ride to show you exactly what I'm doing for a simple, safe, predictable, consistent 1% per week. Now, that's over 50% per year. Jeff, how's it going? That's over 50% per year. If you continuously get 1% every week, that's 50% or more per year. Is it simple? No. Well, it kind of is simple, but you do have to put some effort into it. Meaning, well, this is just not, hey, I'd like to get it, and then it all of a sudden just shows up. No, you actually have to tend to your money. Scott wants to take a look at BBY. Isn't that Best Buy, or is that Bed Bath & Beyond? I don't know. No, BBY, it's Best Buy. All right, we'll take a look at Best Buy. Just hold on a second. All right, so that being said, yeah, it does take 10 to 15 minutes every single day in order for you to tend to your accounts. But look at it this way. Nobody has more interest in your money than you, so why don't you at least have a good idea of what's going on with your money? Because at some point, whether you agree with me or not is really irrelevant. You are going to get old, and sometime you are going to have money coming in where you are not working, where you are not punching a time clock. Randall Ray, we're going to take a look at Macy's in a little bit. Sit tight, all right? Holding no matter what. JRV, what's happening? All right, so you're going to retire at some point. Money is going to have to come from somewhere. We're the only species on this planet that has to pay to live here. And depending on how you want to live, well, that's going to be directly related to the amount of money you need on a weekly or monthly basis in order to live comfortably. They don't call them the golden years for no reason. Well, it's time you cash in your gold and you sit back and take advantage of, what is it called, squirreling away all that little pennies, nickels, dimes, and quarters, whatever it is, over their working life. Okay, now I've been working since 1973. What is that, 52 years ago? My first job working Old Man Simmons Farm. Ugar. Okay, Ugar, dude, you're here you're here often. And for some strange reason, you keep asking me to look at stocks that I know off the top of my head are going to be a no. Now, Main, M-A-I-N, is a monthly optionable stock, and it's definitely a no. Because I can't get weekly cash flow from a company that offers monthly options. Okay, here's Main, right here, M-A-I-N, monthly options. Now, I only have two criteria and only two criteria for the stocks that I look at. Okay, one, it's got to be consistently profitable. It boggles my mind. It really does. I am confused as hell, and I consider myself a halfway decently intelligent person. It boggles my mind. Well, people will take their hard-earned money and put it into some place, into some company that's not consistently profitable. Why would you do that? I have no idea. What do you think about ETH and XRP? JVR, thanks for showing up. I appreciate your interaction. I like the questions. However, okay, JVR, if you looked in the top left corner, you'll see the name of this show is called Dividend Stock Talk. And nothing to do with cryptocurrency whatsoever. No cryptocurrency. Terribly sorry, dude. You're just in the wrong place. Simone wants to take a look at Kohl's, KSS. Now, Simone, I do have some Kohl's still. We'll take a look at it. Jersey wants to take a look at Riot. BAM. Oh, Ugar wants to take a look at BAM. I never even heard of BAM, Ugar. RJF. What is RJF? RJF. We'll take a look at it, see what it looks like. QBTS. Cardinal, how are you doing today? QBTS. All right, hold up on the questions for a second. Moontang, the stock we're looking at here, MAIN, it's a no. Okay, so let me say, hold on a second. Who's that? Get cultured. Oh, that's cool. Caterpillar and Ford. And Ford. Okay, sit tight. We'll get to that one. Hold on a second. AKAM. What the heck is that? AKAM. All right. Hold tight. I'm going to stop the questions in a second. Let me briefly explain to you what it is I'm looking here. What I'm looking for are companies that are consistently profitable. That means at least 2 decades of profits. Okay, Moontang, you want to look at Zim? I can tell you right now, Zim's going to be a no. But I'll take a look at it and I'll explain to you why I don't like it. It's the best I can do. I can't tell you what to buy. I have no intention of telling anyone what to buy. I have no intention of telling anyone what to sell. Okay? Somebody sold the messages. It's in held for review. I wonder what's in that thing. Okay. Sensoro. Oh, so JRF should be interesting to hear your viewpoint. It should be. I've never heard of it. But Sanchez, MSTY, that's a no right off the top. I know for a fact MSTY has not been around for 2 decades. So there's no possible way it can have. Why the 20-year rule? Sebastian, the 20-year rule? Well, I have no qualms whatsoever where you want to put your money. Now, there's 9,968. Last time I checked, you know what? We got some time. Day's just started, so let's go check it out. All right, we're going to FinViz, FINVIZ, financial visualizations. Basically, what they are doing is they are showing you a website that actually has all the stocks that you can take a look at. So that's what we're going to do. And I'm going to tell you, Sebastian, why I like it. Okay, here we go. FinViz. You're going to have to get your financial information from somewhere. I like FinViz. Gives me a little bit. Here's the number right here. Are you ready? Wait a second. Let's get rid of that thing. Oppenheimer funds. Yeah. See this number right here? 9,968. That means there's 9,968 companies that you can invest in at any moment in time. Hold that thought. See this little tab right here? Dividend yield. Now what this is going to do, it's going to break down how many companies actually have a dividend. Okay, just a positive dividend. Okay, 5,777. So 9,968 companies, but only 5,777 actually pay a dividend. Now, why am I interested in a dividend? Well, I'll tell you why. Hold on, let me get over to Yahoo Finance, because we're going to be using that website in a little bit. right there. All right. All right, so Sebastian wants to know why a 20-year rule. Okay. Hold on. Trivgun LMND. Never heard of it. LMND. Never heard of it. CPB, Campbell Soup. I heard of them. Pepsi. Heard of them. All right. Well, I don't need this at the moment. Let's get out of that. Let's get back to here. Okay, so Sebastian, why do I want the 20-year rule? Now, this is money that I'm investing. It's my money. So I want to make sure the money that I invest into a company is going into a company that is consistently profitable. Now, when I say consistently profitable, I'm talking 2 decades. Okay, out of 9,968 different companies, there's only about 300 companies that have consistently increased their dividends for more than 2 decades. So if they're consistently profitable, why wouldn't I want to put my money there? That should be a better question. Ad blocker. I have Pancho de Leon. I have no idea what ad blocker is. You got to give me the ticker symbol if you actually want me to look at anything. Okay. Trivgun LMD is Lemonade, and it's an insurance company. Yeah, but I'm pretty sure they ain't 20 years old because I haven't heard of them. And if they are 20 years old, well, have they increased their dividends to their shareholders for 20 years? Now, why is that important? Well, because a dividend is a part of the profits that the company gives back to the investors. And that's who we are. We are the investors. We buy, we sell the stocks. Well, buying and selling a stock, once you own a stock, you become a part owner in that company. So you are entitled. I am entitled to a portion of their profits. And that portion of the profits that they give back to the investors is called a dividend. Okay? So you have 2 different kinds of companies. Okay, we just looked a little while ago. 5,777 take their profits and share them with their investors. Okay? The rest of them don't. Why would I want to invest my money? And I'll tell you why. Investing your money into a company that does not pay dividends, well, that's for capital appreciation. You buy it down here and it shoots up like that. Well, great if that's what you're looking for. If you're looking to buy low, have it shoot up and go higher, and you say, yay, my money's increasing, you're in the wrong place. That is not what I'm looking for. I'm not even seeing this whole thing here. Oops, where the hell did it go? That's what I want right there. I want to see the whole screen. All right, so I'm looking for cash flow, not capital appreciation. I have no desire for capital appreciation. Well, it sounds good, but I'm retired. Okay, capital appreciation doesn't help me pay my bills. You don't make any money from capital appreciation until you sell something. Okay? So there's 2 criteria and only 2 criteria that I'm looking for. Okay, Antoine wants to take a look at Morgan Stanley. And Trivgun wants to take a look at UPS. UPS. Moontang, what dividend percentage do I look for? Okay, Moontang, you're new here. So what I appreciate, you got any questions, ask. I love them. I'm going to answer whatever questions you got. I don't look at dividend percentages. I don't. I look at consistency of dividend increases. That means if the company is profitable this year, they're giving out X amount. That's a portion of the profits. Next year, it should be higher. The year after that, it should be higher. The year after that, it should be higher. It should be higher every single year. Oh, so RTF should be interesting. Okay, so we're going to take a look at RTF. I'm going to stop all the questions. We have 15 or 20 stocks to zip right through. Let's see how quickly we can go through them. Now remember, today is Sunday, which means tomorrow starts week 11. Week 11. There's 52 weeks in a year. 13 weeks in a quarter. April, May, wait, January, February, March, first quarter. April, May, June, second quarter. June, July, August, July, August, September, third quarter. October, November, December, fourth quarter. We're in the first quarter, the 11th week, which means we got 3 weeks to go before the first quarter is done and over with. All right, well, let's see what we can do for week number 11 coming up tomorrow morning. So let's take a look. Now, I'm going to breeze through some of these stocks and you'll see how quick and easy it really should be. I don't spend a lot of time on it. When you get to my age, when you're retired, your most valuable asset, your health and your time. Okay, that's it, health and time. Okay, most people spend all their time making money in their younger days, and in their older days and retired, they spend all their money looking for time. Or health, one or the other, yeah. You ruin your health going for money, and you spend all your money trying to get back your health. I think that's the way that I heard. Okay, glasses are on. I can see the screen. Main is a no. Now, 2 criteria and only 2 criteria. Number 1, consistency of profitability. I want 2 decades. That's 20 years. Second, weekly options. The only way I'm going to get weekly options is, do they have weekly cash flow? Weekly cash flow. The only way I'm going to get weekly cash flow is with weekly stock options or sitting in front of my computer looking at charts all day long. Yeah, no thank you. I honestly, I could do it. I could make a lot more money, but that's not what I'm here for. I'm not here to make a lot of money. I'm here to show you how I do it, okay? It's simple, it's easy. You're not gonna break the bank by doing it. You're not gonna get a fortune. If you're looking to strike it rich overnight, you're in the wrong place. Okay, this is slow, this is boring, this is monotonous. It is the same stocks over and over and over again. You got the dividend kings, you got the dividend aristocrats, the dividend champions, the dividend contenders. That's only about 300 stocks, and that's about all I look at. Now, we looked about, 15 minutes ago, 9,968 companies. I'm only interested in 300. That's it. I don't care about the other ones. I don't. All right, so let's roll. Let's see what we're looking at. Number 1 on the list is Intel. So let's take a look at Intel. Now, I do own some Intel, just in case you're wondering. It's not really a requirement for me to tell you, but I like to be honest and open with people. I do tell you exactly what I have. I do have some Intel. At this moment in time, it's at 2064. I'm looking for 5 things. Every time I do the same thing over and over and over again. I've been doing it for 20 years and it's always been the exact same. I'm looking for 5 things. First is the 1-year chart. I'm looking for the high of the year, the low of the year. Where was it a year ago? Where is it now? And what is the overall direction? Down, sideways, down, sideways. Now we're at 2064. All right, so if I'm going to buy it tomorrow morning, I want to do what is called a safe trading strategy. Well, the safest trading strategy I know of is called the covered call. So when you buy a stock, you sell it to someone else, the rights to buy it from you at a certain price by a certain date. Now, the date we're looking at is going to be 14 March 25, which is this coming Friday. So I'm going to load up on all my shares tomorrow morning, okay? Invest all my money. 98% of all my money is invested first thing Monday morning. Reason being, I have no use for cash sitting in my account. Doesn't do me any good. It doesn't pay my bills just sitting there. It only pays my bills when I pay my bills, which is usually on Tuesday or Wednesday. Because when I buy my stocks on Monday and Tuesday, I sell options against them. Those options equal to about 1% of what my account is, and that I take care of my bills. What I don't take care of this week, I'll take care of next week. What I don't take care of next week, I'll take care of the week after. It is a consistent weekly paycheck that I get, and it's about 1% a week on average, okay? All right, so Intel, 2056. Well, the 2050s are going for 75 cents. That is over 3%. Now, are you going to get 3% every time you do a trade? No, you probably won't. Now, sometimes you'll get 1, sometimes you'll get 2, sometimes you'll get 3, 4, or 5. I like Intel. It pays a nice premium, and look at the premiums even further down. 1, 2, 3, 4, 5, 6 strikes out of the money, and you're still making something. Well, something is better than nothing. But let's go and do a few to see if you understand the way it works. Because the number one thing I want you to take away from this, okay, if you get anything at all, what I'm saying, number one is, does it make sense? That's it. It either makes sense or it doesn't. Either do it or don't do it. If you don't want to take control and invest in your own money, okay, give it to someone else. Let someone else do it. But don't complain when other people's getting 20, 30, 40, 50% per year and you're only getting 5 or 10 or 15. Because I've never seen a money manager or a money backer or even what do you call it? A mutual fund or even a hedge fund that pays over 20 or 30% per year consistently. I've never seen it. Okay, there may be a few out there. I remember someone telling me last week there's some hedge fund that makes 30% a year. Well, cool. Let's keep on moving. All right. Intel. Let's take a look at all the numbers on Intel. All right, a year ago was the high of the year, 45.41. Now, it bottomed out in September, second week in September at 18.51. Well, look at the last 90 days. Now, remember, I want to look at 4 different charts. This is the second chart. First chart is the 1-year chart. Second chart I want to look at is the 90-day chart. And there's a couple of reasons why I want to look at the 90-day chart. Well, number one, I want to see what the high, the low, where it was, where it is, what's the movement. But I also want to look at, is there a pattern? And is it a repeatable pattern? Well, this one, it kind of looks like there is, okay? Down, it took about 2.5 weeks to go down. Then about a week and a half to go up, another week to go down, another week to go up, another 2 weeks to go down, week to go up, 2 weeks to come down. Now it's coming down here. Here's the bottom right there, and it has 1 day to the upside. That's what I'm looking for, okay? Look, down, up, down, up, down, up, down. Now, hypothetically, she should be going up because Thursday was the low, Friday was higher. Let's zoom in a little bit tighter. We want to go to the 9th of February, which is a Saturday. Oh, Sunday. All right, so we'll be looking at the 10th. All right. Well, February 10th, 29 days ago, or was it 28 days ago? I don't know. Anyway, here's our 30-day bottom right there, 1924. That's the 30-day bottom. Now she goes from 19 to 27. That's a $9 increase. Now, 19 to 27, $9, that's a little bit more. Oh, yeah. No, sorry, a little bit less than 30%. Right around 30%. Here to here. That's a 30% increase. If you think that within a week, a 30% increase in 1 week, and you don't think people are going to take profits and the stock's going to drop, well, I don't know what to tell you. Stocks go up, stocks go down. Why do they go down? Because people want to take their profits. We are here to make money. Stocks go up, stocks go down. What do you think is going to happen next? It's going to go back up again. Here's the high here. It drops all the way down. Now we're here at 20. And Friday was a little bit higher. Well, that looks good to me, but I want to look at one more chart. I want to look at the seasonality. Now, if you don't know what a seasonality chart is and what it's used for, let me briefly explain. All the way to the left is January 1st. All the way to the right, December 31st. This blue line here, that represents what the stock is doing this year. This line up here, this red line, that's a 10-year average of what the stock normally does. Well, Intel, they basically do the same things over and over again. They make computer chips and computer stuff. I don't know. So, this is where we are right here, the beginning of March. I want to zoom into that area right there and see what usually happens in this time frame. All right. Basically, for the next couple of weeks, we're going to go sideways, and then towards the end of the month, she's going to start going up. Well, I don't mind sideways, and I like the idea of it going up. So let's get out of there. And let's actually do a practice trade on Intel. So if I decide to buy Intel tomorrow morning, you will see exactly what the numbers look like. Now, you got to remember, okay, these numbers here are going to change as soon as the market is open. So while the market is open from 9 a.m. to 9:30 a.m. to 4 p.m., all these numbers, every single number here changes, changing and constantly changing. It's kind of like jumping onto a Ferris wheel, or no, not a Ferris wheel. I don't know, moving train. You just don't know where you're going to get in at it. All right, anyway. That being said, the current price, $20.56, right here. See it? This is what I can buy it for. Now, I want to pick the closest strike price. Now, let me explain to you what a covered call is. Okay, we already know what we're going to buy it for. This is the price right there, $20.56. If I want to buy it first thing in the morning, that's the price right there. Now, when I sell it, now, I don't think I told you what my rules were. I don't think so. When I want to sell it, I want to know what I'm going to make before I sell it. When I say I want to make a simple, safe, predictable, consistent 1% per week, consistent, well, it's a weekly option. I can trade it every single week. Let's get this out of here. We don't need this. Okay. See this here? 14 March, that's this Friday. 21 March, that's next Friday. 28 March, well, that's 3 Fridays away. 4 April, 5 Fridays away, 6 Fridays away, 7 Fridays away, 8 Fridays away, 9 Fridays. Every single Friday. This is what it's called a weekly option. I can trade it every single week. It is consistent. That's the consistency part. Simple is buying a stock, selling it to someone else. Now, predictable. Remember, simple, safe, predictable, consistent 1% per week. Well, simple, a covered call. I'm buying the stock and I'm selling it to someone else for the same price I paid for it. Close to it. $20.57, I'm selling it for $20.50. Picking up 75 cents. All right, so I'm walking away with 68 cents. 68 cents on a $20 stock. That's over 3%. Let's take a look and see how it looks. First thing I want to change is this right here. Okay, where it says single. I want to change that to it says covered call. Now, when I say safe strategy, the safest strategy at all is just buying the stock. That's the safest. But you don't make any money until you sell something. So if I'm buying the stock, selling it to someone else for the exact same money I just paid for it, a lot of people say, well, where are you making your money? I'm making my money on the insurance premium. Okay, I'll explain that in a little bit. Now, it's at $20.56. I want to pick the $20.50. The $20.50 is right there, 1981. I'm just going to do one contract. This is where your algebra comes in handy. If one contract is going to give me this, well, two contracts will give me twice that much. 3 contracts, 3 times that much. Whoops. I want to change it to a market order. Now, the reason why I want to change it to a market order as opposed to a limit order, you get to choose the price. This is what I want to pay. This is what I want to receive. You may or may not get it. I like a market order when I'm getting into it. The reason being, it's 2 trades in one. It's 2 trades, so I'm only paying 1 commission, number 1. Number 2 is the stock and the option are tied together, and I already know what my profit is going to be before I even do it. Here's the order. Let me read it to you. Buy 1 covered called Intel 100s. That is the weekly option trade. 14 March 25. Well, that expires this coming Friday. $20.50. That is the call stock option I am selling against the stock Intel at the market to open. That's the order. That's what it sounds like. Now, in case you're wondering, if you didn't know, this screen behind me, this screen is live on YouTube. It is being recorded. And no, this is not a recording. This is being recorded. Okay. It is, just in case you're wondering, 9:54 p.m. third month of the year, 9th day of the year of 2025. So there, you have the time, the date. It is not a recording. It is being recorded. So tomorrow, yeah, it'll be a recording tomorrow. Anyway, so if what I say interests you, if you need to get a closer look at this, yes, it's going to be on YouTube and it is going to be recorded so you can go back and watch any one of my videos. Every single night, I do a video, okay? And I'm live every single night. You can come here every single night, ask me questions. If you have a question about this particular strategy. Now, I know how to do a lot of the other ones, but this is the only one I give away for free. Yes, I do have paid services, but I'm not going to try to sell anyone anything, okay? Your feed keeps freezing. Edwin, yes, I'm aware of that, Edwin, over some strange reason, Instagram, okay, now, I hear what you're saying, Edwin. Okay, the Instagram camera, for some strange reason, is not as smooth as you would think. Because the, what do you call that thing? The modem. Yeah, the modem is literally, I'm going to say, maybe 6 feet away. It's right over there in the corner of the room, 6 feet away from the phone. And it's on Wi-Fi. So why is it keep stalling? I don't know. Maybe it's just Instagram. Maybe it's a bad camera. I don't know. All right, so that being said, now, like I said, I stopped all the questions. I'm not going to answer any questions. We're just going to breeze through all these stocks really quickly, and then I will release the questions. Please only ask a question once in the chat box. I will answer each and every individual question. Every night I answer each question. Right around 11:15, I start looking at stocks, and we just start answering questions. Okay, that being said, here's the order. The maximum profit, $69.50. What is it costing me? The cost of trade, including commissions and fees, $1,981. Okay, so let's see exactly how much that is. Edwin, I normally watch on YouTube. Love your channel. I watch your pre-recorded videos. Keep them coming. Thanks, Edwin. All right. We're going to bring up the calculator to find out what kind of rate of return this one is giving. Because before I do any trade whatsoever, I want to know exactly how much I'm making. Okay? Now remember when I say simple, safe, predictable, well, I already know what I'm making. Consistent, I can do it every single week because it's a weekly option. That's the reason I like weekly optionable stocks, because I can trade them every single week. Okay, so let's show you quickly how the math works, because you're all probably curious. Well, if you're going to invest money, okay, you want to know what is your rate of return? How much are you making? Well, I want 1% every single week. That's over 50% per year. So let's take a gander. Now, the way you figure out what your profit is, or your rate of return, is you take your profit, okay, max profit, $69.50, throw it into the calculator, $69.50, and then you divide it by the purchase price, or the cost of the trade. Cost of the trade, including commissions and fees, $1,981. $1,981. I remember 1981. I was a junior in high school. I had a blast. It was awesome. Anyway, and that equals grand total of 3.5%. Okay, this one trade I just showed you. Okay, it's Intel. So you have a couple of questions to ask yourself. Question number one, does it make sense? Question number two, do I like this company? It's Intel. Have you heard of them? I don't know. I mean, I have. I grew up in the 70s, 80s, and 90s. Of course I've heard of Intel. Question number three, do I like Intel at this current price? Question number four, Can I picture myself buying Intel and holding it until the day I die or until it hits my target? Well, in this instance, my target is $20.50. Well, at this moment in time, the stock is currently at $20.59. Well, if I'm buying it for $20.59, selling at $20.50, and I'm making 3.5% for the week, well, that kind of okay with me. But that's the questions you got to ask. Does it make sense? Do I like it? Am I willing to hold on to it? Okay, that's Intel. Now, that's basically how I'm going to do every single one of them. We got about 15 more to go. I'm going to breeze through them really quick, and then we'll open up for questions again, okay? So I will answer each and every question. Hold on, that was Intel. I like Intel. C, Citigroup. Let's move this over. First and foremost, we're going to say no to Citigroup this week, and the reason why, high, low, is, look at this. Okay, she shoots up, pulls back. We're looking for a new bottom here. So not quite this week. Okay, so we're going to put Citigroup down for next week. Okay. Altria. No. Altria is at the high of the year. No, thank you. Macy's. Interesting. Look at that. High, low. Where was it? Where is it? Look at the movement. Down, sideways, down, sideways, down. Right here, she's bouncing back up. $14. 14 is going for 20 cents to 46. So yeah, we will get our 1% out of Macy's. Let's take a look. Now, if you're kind of curious, Macy's was one of my number one stocks last year. 22.10 last March. The bottom, 12.53, and that was, looks like Thursday. All right, so last 90 days, okay, high, low, where was it? Where is it? Look at this, down, up, down, up, down, up, down, up. Well, she's just starting. Here's the bottom of the year. Now, I always tell people you're going to make your most money buying low and selling high. So here's a couple of questions you need to ask yourself. Have you ever heard of Macy's? Well, you should. They've been around for over 100 years. You're going to buy low and sell high. Well, guess what? You cannot get any lower than the low of the year. That was Thursday. Maybe. Now, I personally like 2 to 3 days to the upside when we find a bottom. Well, here's the bottom right there. Let's zoom in a little closer and see if it makes sense. Okay, 30 days ago, we're right here, 14.50. We shoot up to 16, drop all the way down to 12.50, and yep, Friday it was higher than Thursday, but I like 2 to 3 days. So if she opens up higher tomorrow, well, that satisfies it for me because number one, I like Macy's, and yes, I actually already own some Macy's. Of course I do. You should have seen how many times I bought it last year. I bought it, I think, 45 times last year because I buy on Monday, I get rid of it on Thursday, Friday, or sometimes I carry it through. But Macy's, I've had almost every single week. I buy it, sell it, buy it, sell it, buy it, sell it. If I make 1% every single week and I bought it 45 times last year, well, that's over 45% I made off of Macy's. All right, let's keep on keeping on. All right, so I like Macy's. What does it normally do this time of year? Okay, so we're here. We're going to go sideways for about 2 weeks. That's fine. I can deal with it sideways for 2 weeks. Works for me. Okay, we're currently at 14. Let's do the 14s real quick. 14's right there. Change it to just 1. At the market, here we go, here we go. Buy 1 covered call of Macy's, 100, that's the weeklies. 14 March 25, the $14 call strike at the market to open. Okay, maximum profit, 27 bucks. What's it costing me? 1,300. Well, let's do a little bit of math. Clear that. 27 bucks. It doesn't sound like a lot, but let's see what it comes to. 1,373, and that equals 1.9, almost 2%. Do you have any idea what 2% a week is? 100% a year. Well, I like Macy's. I have no problem buying it and holding on to it. All right, let's get out of there. And there were even talks last year of Macy's being bought out and going private. But I think the owner said, hell no. All right, so anyway, so Macy's, yep, I'm going to put a little check mark next to Macy's. BBY is next. Ooh, look at that. Now, some people may not like this, but I like it. Only because you see that big drop there? Well, made the bottom, 2 days to the upside. Okay, gapped up, gap down. Ooh, gap downs are great because they have a tendency to fill. Let's take a closer look. But before we do, I like the chart. High, low, all that kind of nice, neat stuff. Look at the numbers. 79.41. We'll be looking at the 79s going for 177. That's yes. The 80s, 126. Now, the 79 is a safer trade. It's safer. But the 80 is more profitable. Me, personally, I go for the 79 because I don't want to hold on to anything. I have no desire to go down that matrimony walk for anything anymore. All right, anyway. A year ago, 77.58. The bottom of the year was towards the end of May at 69. Okay, the top, 103.70, the end of August. Well, look at the last 90 days. Okay, here's your last 90 days. High, low, where was it? Where is it? Look at this. Up, down, 1, 2, 3. 3 days to the upside from the bottom of the year. Okay, remember what I said earlier? You're not going to make more money than buying low and selling high. You can't get any lower than the low of the year, and that was just 4 days ago. All righty? So, that being said, I'm going to put a little check mark next to Best Buy. Maine. We already took Maine. That's a no. Kohl's. Take a look at Kohl's. KSS, Kohl's. Interesting. Now, Kohl's, I do own some Kohl's, in case you're wondering. The high, the low, where was it? Where is it? Look at this. Down, up. 12.10. The 12s are going for 90 cents. Oh, hell yeah. That's about 8%. Why would I say no to that? All right, so a year ago, we're at 27.13. The high of the year, beginning of April, 29.55. Last 90 days, okay? High and low, where was it? Where is it? Look at it, it's bouncing up right here. 4 days ago was the bottom for Kohl's. 1, 2, 3 days to the upside. How can you say no to Kohl's? The bottom of the year, 4 days ago. All right, last 30 days. Okay, here's your last 30 days. Down, up, down, up. I don't know. I might want to watch and see what happens because with a big jump like that, there could be profit taken. I don't know. Do you like Kohl's at 12? Well, at 12, it's going for 90 cents. I would buy it just because I like Kohl's, because I already own Kohl's in a bunch of different accounts. All right, so that being said, let's go to the next one. Next one. What are we looking at? Riot. Now, I actually own some Riot too. R-I-O-T. Okay. We're going to say no to Riot this week only because I do own some. But here, look. It's looking for the new bottom. Okay. Friday was the bottom of the year. So waiting for it to find the bottom, turn around. Once she does, we're going to write it down for next week. Riot. BAM. What the heck is BAM? BAM is a no. No to Brookfield. RJF. No to RJF. QBTS. D-Wave Quantum. For some strange reason. What is it? QBTS, QBTS. Let's find out. QBTS. No dividends. Okay? No dividends, no thank you. Okay? Simple. Caterpillar. Love me some Caterpillar. CAT. Ooh, look at that. That's nice. Year ago, high, low. Where was it? Where is it? Nice. 490. Sorry. 349 to 350s. Ooh, almost $6. That's a yes. Let's take a look at the chart. High, low look at the movement. Up, down, up, down, up. Last 90 days. Wait a second. A year ago, 335. We bottomed out in August at 306. Got a double top at 418, the beginning of November. Well, look at the last 90 days. Got a double top, bottom. Look at the movement. Down, up, down, up. You can't go wrong there. And it's Caterpillar. We know who Caterpillar is. What does Caterpillar normally do? Caterpillar normally gives me one of these things. Look at that. From January to December. Nice upward move all year long. How can you go wrong with Caterpillar? Well, let's take a look for the month of March. What does it normally do? All right, so the month of March, here we are. We're going to have a little bit of dip next week. It's going to retrace towards the end of the month. I don't know. Do you like Caterpillar? Now, the interesting thing about seasonality just gives us an idea of what the stock normally does. That doesn't mean it's going to do that. Okay, Kakarum wants to look at Wally World. I don't know why. I'm very rarely by Walmart. Let's go back to here. Okay, let's look at the last 30 days right there. Okay, so here's your last 30 days. 30 days ago, 366. Drops down to 320, shoots back up. Now it goes from 320 to 350. That's a 10% move. Okay, 10%. Could it keep going higher? Yeah. Get 350, the high is 365. So yeah, maybe a week. Maybe do the 350s off the 347s, whichever one makes more sense. But I go for safety as opposed to profitability. But as long as I'm getting my 1%, I'm perfectly okay with it. Caterpillar, put a check next to that. Ford is next. Ooh, nice. Look at that. High, low. Wait a minute, low's here. Look at this. Up, down, sideways, down, up. 973, the 985, 21. That's 2%. Well, that works for me. And yes, I do own some Ford. Okay, so Ford, I'm going to mark that one off. Okay. A year ago, we were at 1215. The high of the year, 1491, was in July. And then the beginning of August, she drops down, goes sideways for a couple of months. Look at your last 90 days. Okay, high, low. Where was it? Where is it? Look at the movement. Down, up, 973. It looks good on the 90-day chart. Well, the 90-day chart looks nice. Get a high right here, 1080. Well, right now we're at 990. We got a long way to go. On the 90-day chart, wait, before you get all excited, wait till you see what it looks like on the 30-day chart. 30-day chart saying, yeah, no thank you. Because your bottom is here, okay, which was Tuesday. Tuesday was your 30-day bottom. Look at the big jump on Wednesday and the big jump on Friday. More than likely, there's going to be profit taking coming Monday because going from $9 to $9.90 is a 10% increase. 10% in 1 week, yeah, normally is going to be profit taking. So as much as I like Ford, I'm going to be a little iffy on that one. Akram, A-K-A-M, Akam, A-K-A-M. Interesting. Really interesting. Why have I never heard of this company? Well, let's see how wonderful they are with their dividends. AKAM. AKAM. That's why I never heard of them. No dividends, which means they do not share their profits. If they don't share their profits, why would I want to invest in them? Now, whoever parted up, I mean, hey, you like the company, more power to you. I don't do companies that don't share their profits because now you're asking me to go in and read all of the quarterly reports, all of the annual reports, just to see if this company's consistently profitable or not. Yeah, no, thank you. It, it's too much work for me. I'm a lazy trader. I really am. And the funny thing is, if it works, why mess with it? Now, I've been doing this for a while, and I know some of you guys here are new, don't know, and probably never heard of me, never seen me doing anything. Let's go here, and let's go to The 10MinuteTrader, which is my website, The 10MinuteTrader. Okay, give it a second to load up. Wow, that's slow. Which is kind of weird because the what do you call it? The router is just like 6 feet away. All right. So while that's loading, we'll go take a look at that in a little bit. All right, back to where we were. All right. Where were we? Acom, yeah, no. Zim, no. Lemonade, LMND. LMND. Okay. LMND. Here's lemonade. No dividends. Now, come on, guys. I only ask for two things. Just two. 20 years of consistent profitability, which means they got to have dividends and weekly options. Okay? No dividends. We're just wasting our time taking a look at them. CPB, Campbell's Soup. I know CPB is a good one. CPB, I've bought that many a times. Campbell's Soup. Here we go. Nice. Take a look. Your high, your low, where was it? Where is it? Look at the movement. Up, down, up. 42.87. The 42s go for that. The 43s. You know, if you look at 43, 35 to 45, you might get your 1% out of this. Let's take a gander and see what it looks like. It's probably going to be a no, though, only because that's as far as I got. CPB. Because of this right here. It's at the 30-day high. Yeah, no thank you. No to Campbell's. Pepsi. I don't know. That doesn't look very appetizing. Look at where it is. Your 30-day bottom here. 30-day top. She pulls back. Not really sure which direction it's going. It's too uncertain for me. Now, don't get me wrong. I like Pepsi. I really do. It's a great company. They've been in business for over 100 years. But if it's not jumping out at me, like right here, it's jumping out. Okay, here's the bottom. 2 days to the upside. Yeah, then I jump in. Here is no real clear cut. It's not as clear. So I'm going to say no. Morgan Stanley, we got 3 left to go, and then we'll jump up to the questions again. Morgan Stanley. We'll open the questions up and take some more. No to Morgan Stanley. At the bottom. We'll put it down for next week. We'll take a look at Morgan Stanley next week because hypothetically speaking, think about this for a second. Okay? Well, tomorrow starts week 11 of the first quarter. Okay? So here's your 30-day high. Here's your 30-day bottom. How much lower is it going to go before Morgan Stanley turns around and starts going up? Probably sometime next week. So I'm going to write Morgan Stanley for next week. Last on the list, Wally World. The Wally World's usually a no. WMT, and the reason being, oh, look at that. Okay, here's your high of the year. Okay, high of a 30-day period, bottom of a 30-day period, looking for that bottom again. So we'll put Wally World for next week. And now we're going to open up questions and answer a bunch of questions. WMT. There we go. Get rid of these glasses so I can read these things. All right, Antoine, we already looked at, oh, wait a second. Trivgun wants to take a look at UPS. Okay, we'll write that one down for the next round. UPS, top of the list. What else do we got? What dividend percentage do you look for? I like consistency of profitability. It has nothing to do with what their dividend is. It's how consistently profitable are they. Middle finger, interesting. Of all the words and phrases you could have chosen, you chose that. Bitcoin, yeah, no. Intel's AI and foundry ambitions could drive strong returns if execution improves. Okay, cool. Love the shirt. Thank you. Ah, bummer. Sorry, Moontang. Should I buy or sell now? Okay, Zakaria, I have no idea what you're buying and what you're selling, so I can't answer that question. Felix, hey James, Walgreens will not have good premiums. Will you sell the stock at over 11 and invest in other stocks? Okay, Felix, about Walgreens, they have an offer. I believe it got accepted for them to go private. So I really don't think Walgreens is going to be available for trading anymore. Robert, hey James, thanks bud for your experience. Have a great one. Thank you there, Robert. Okay, so let's get back to the questions on TikTok. Walmart, we already took a look at. Thank you for that, Edwin. Susan, how are you? Ron, how are you? Over there on Facebook. All right, DVN, Golden Law Group, back again. DVN, we'll put that one down. I like DVN, Devon Energy. Oh, Golden Law Group wants to look at Siri also. Go ahead. Wow, I missed all these questions. Okay, now I said I'm going to answer each and every individual question. I just realized there's going to be so many of them. Holy cow. RJF is a financial service firm, 20 plus years. I can't wait till you look. Okay, Cinzaro, we look at RJF. RJF. Okay, I don't care if they're a 500-year-old company. They have monthly options. 21 March, 17 April, 16 May, 15 August, 6 January, 15 January. Yeah, I don't do monthly options. No. Idea great. It just doesn't fit. Okay, if it doesn't fit, no thank you. Sorry. Okay, flash fishing, flag fishing. Oh, flag fishing. Yeah, we already looked at Caterpillar. Sanchez, most of those companies don't pay but 3%. You can get that in a bank account with no risk. Hey, Sanchez, I'm not quite sure what you're talking about. Because from the way it looks, you're looking at the annual yield, which means if I buy it now, I wait a whole year and get 3%. Okay, you're definitely not listening to what I'm saying. I'm buying something tomorrow morning, getting 1%. If I do that every single week, 1% every single week, that's over 50% per year. Okay, the only reason I'm using dividend stocks that are consistently profitable is because they're consistently profitable. They're doing something right consistently. Okay, but just chill, relax, you'll see everything. Everyone look into the loaded lion. I have no idea what that means. Thoughts on very negative futures right now. Okay, MC, thank you for that. Slow and steady wins the race. Michael Reed Dazel. Okay, cool beans. What accounts do you use? I can tell you. Tied it up, Ginger. How are you doing? Now, I'm not quite sure what do you mean by what account do I use? Got to be a little bit more specific with your questions because you're only giving me 4 or 5 words and I'm not really 100% sure what we're talking about. Justin, best dividend stock right now, Pfizer, PFE, PFE. Now, don't get me wrong, I like Pfizer, and yeah, I do buy Pfizer once in a while. Let's take a quick look at it. Here's the high of the year. Here's the low of the year. Here's where it was. Here's where it is. Look at the movement. Down, up, down, up. We're at 26.74. The closest strike price to that is going to be the 27, and it's going from 22 to 23. So I'm going to say no for Pfizer this week. Reason being is there are too many other companies that are giving me over 1%. Pfizer's not giving me 1% this week, so why would I want to buy it? Now, don't get me wrong, I have bought Pfizer in the past when the numbers look better. At this moment in time, the numbers don't look that good. Okay, so if I can get 3% or 4% investing in Intel, and Pfizer gives me less than 1%, well, why would I do Pfizer? Everything being equal, okay, both good companies, both consistently increase their profits to the shareholders, but one's paying less than 1% and one's paying over 3%, it's a no-brainer for me. Okay. I assume you sold your stock on WBA, Felix. Yes, I did. It got called away. Do you know the market algorithm setup? Cheyenne, that's an interesting question. I would like you to give me some more information on that. Be more than if the price, if it goes above the strike, would you ever roll to the next week to keep the shares and sell a new call? Absolutely, Hogan. It's always going to be about the numbers. Okay, if I buy a stock tomorrow morning, it's usually because I'm buying it low and it looks as if it's going to go up. I like to have the odds and probabilities in my favor. Well, if it gone up 10 years in a row, well, there's a good chance it'll probably go up again. Now, if a stock increases just before the dividend date, well, and they got the dividend coming up and they've increased their dividends every single year, well, that's another odd in my favor. Odds and probabilities in my favor. That's what I'm looking for. Okay, next. Athena, I want $75,000 in cash. Should I invest it all at once? Okay, Athena, I know absolutely nothing about you. I can't give you that kind of information. Now, here's an interesting one for you. There's a couple hundred people here right now. If you really want to talk to me, I actually enjoy calling people and talking to them, getting to hear their story, seeing what they're looking for. DM me with your phone number. If you get a text or telegram or snap or one of those things saying it's me, I'm telling you right here, right now, it's not. Okay, I don't do Instagram. I don't do Telegram. I don't do WhatsApp. I don't do cryptocurrency. I don't do futures. I don't do any of that stuff. This is the only thing I do, and I do it here live so you actually hear my voice and you can see me interacting with you guys. Okay, so yeah, you want to talk, you want to have a conversation, drop me your phone number. I will give you a call personally, not somebody that works for me personally. Okay, this is just a hobby for me. This is not a business. I'm here to share information to help you guys get better off. Check out 3M. I love 3M. But not this week, I don't. Damn. Okay, here's the high of the year for 3M. Okay, 1, 2, 3, the whole week. Now she's at the 30-day low. Yeah, she went from a 30-day high to a 30-day low in 1 week. I'll put 3M down for next week. Okay, 3M is officially written down for next week. Austin, what's happening? All right, Senzoro, thank you for that. Anthony, how are you? John Collins. Jonathan, Doesn't CPI affect your strategy for the week? No. Consumer Price Index. Okay, Jonathan, let me ask you a couple of questions. Number one, what does Consumer Pricing Index have to do with a company that's over 100 years old? Okay, General Motors, Ford, Macy's, Wells Fargo, Citigroup, Home Depot, Lowe's. There's a lot of companies that are over 100 years old. There was no such thing as a computer pricing index 50 years ago, 60 years ago. Yet these companies who have been in business for over 100 years, they keep increasing their profits and they keep increasing the dividends they share with their shareholders. Okay, so does it? No, it doesn't. But you got to remember rule number one. Rule number one is never buy something you don't want to own. If you don't understand it and you don't want to own it, don't buy it. If you think the CPI is going to affect a stock, well, just sit and wait for it to be done and over with. It's really not that difficult. Mo, my idea of Costco, it's overpriced. James, do you